So now let's dive a little bit deeper into doji candles. And as you can see here on the screen, we have many different types of dojis. They all have different and pretty funny names. But the most important part about the doji candle is that if you take a look at the body of all the dojis here, you can see that the body is, pretty much only a line, which means that the candles open during the candle, it moves up and down, but the candle closes pretty much at the exact same level where it opened. However, it is okay for a doji candle to have a very slight real body, so it might look something like this, but we do want to see the real body either being a complete line or have a very small real body. And now let's talk a little bit about the different types of dojis, because depending on where the real body is located, the doji candles can actually be either bullish or bearish. So for the first candle, the candle right here, this is called a classic doji. And this is where the price, during the candle moves up and down, but it goes down here and closes pretty much in the middle of the candle. So the classic doji indicates indecision, or in other words, uncertainty in the market. As for the next candle, the long leg doji, we can see that the real body here has shifted a slight bit up. You can also have a long leg doji where you have the body of the candle down here, for example. But what's important to learn here is that the higher up the body is, the more bullish the candle will become, and the lower the body, the more bearish the doji candle will become. So a long leg doji can be either more bearish or more bullish depending on where you find the body. The next candle is called the dragonfly doji, and you can see that this is a case where the real body has been pushed all the way to the highest point of the candle. So let's imagine how the price moved within this candle. You can see that the price opened all the way up here. During the candle, the bears managed to push the price pretty far down, but before the close of the candle, the bulls took control once again and actually managed to push the price all the way up to the top. So this makes it so that the dragonfly doji is actually considered a bullish candle. However, as with all patterns, it's important where the candle actually appears. So this pattern, if it comes after an uptrend, it doesn't really signal too much. But if you find a dragonfly doji after a downtrend, in this case, it can actually act as a reversal candle, pretty similar to the hammer. And as you know about the hammer, it indicates a reversal to the upside. The next doji candle, the gravestone doji, is pretty much the opposite of the dragonfly. You can see in this case it opened all the way down here. The bulls managed to push the price up, but before the close of the candle, the bears took full control once again and managed to push the price down to the opening price. So this right here is a bearish reversal pattern, especially if it comes after an uptrend. The last doji candle is a very weird one. It's you can't see it right now. Let me actually move my camera so you can see the name. The last candle here is called the 4 price doji. And this one is not too important to learn because it's very rare. It's very rare to find these 4 price doji in the markets. But this pattern is basically when the price opens and close at the same level, and during the candle it doesn't really move at all. So this is one of these candles that definitely signal uncertainty, and often when you see a 4 price doji, they often indicate that this is something we actually don't want to trade. So this short video was actually just a very short clip from our full candlestick pattern trading course. To watch the full course, simply click or tap on the screen right here. I hope to see you guys in the full course soon, but for now, take care. Ciao, ciao.